Good afternoon. We start here on the business desk this afternoon. Business activity in the local manufacturing industry fell to a 14-month low in the month of September on the back of electricity supply constraints. The manufacturing sector in South Africa is feeling the pinch of the devastating knock-on effects of load shedding. This is according to the latest ABSA Purchasing Managers Index, which showed muted factory activity contributed to a decline in the overall Purchasing Managers Index, which also tracks the sentiment of managers in various companies in the manufacturing space. The index that also tracks business activity declined to 38.5 points from 50.5 basis points in August. That's the lowest monthly reading since July 2021, when deadly riots, looting and arson disrupted supply chains, industrial output and demand for manufactured goods. An outcome below 50 signals a contraction. Mielani Malulega is the senior economist with ABSA, and he joins us now. Thank you very much, Mielani, for joining us. It would seem that the impact that load shedding is having on businesses is similar this week, or in September particularly, to the effects that we saw last year during that deadly unrest in KZN and in parts of Gauteng as well, judging by this index, which has fallen to similar levels last month. What do you make of how the managers of factories are actually feeling at this moment?
You're absolutely right. Look, I think the impact is clearly quite severe, and we do see it, especially when we look at the business activity sub-index, which you were referring to just a short while ago, because that is the sub-index that tells us specifically about production strength. And I think the fact that it's so far below 50, I think shows you, just how adverse the impact of these power cuts have been. And I think when we think back to September, we can sort of understand why this was the case. I mean, of the 30 days in the month, 25 of those had load shedding, and few of those days actually had stage 5 and in some instances stage 6. So it's certainly having a big impact on businesses, and we believe that it's the smaller, it's the medium-sized firms that are really taking the brunt of these power cuts, because it is in that segment of the sector where you don't have the financial resources to invest in backup generation capacity that can ensure that production continues even as you get these bouts of load shedding. So overall, not a very good reading, I think, in terms of what is telling us about the performance of the sector in September.
And of course, the results also don't bode well for what was expected to be a strong recovery in actual manufacturing production, especially for Q3, since we come from what was a bleak Q2.
Q2 was really bad. If you think back to the GDP contraction that we saw, and you look at what the major contributing factors behind that were, manufacturing was actually the biggest drag in that quarter. And I think as you see PMI numbers like this, I mean, you start to ask yourself, how much of a rebound, if any, are we likely to see in the third quarter of this year? Are we going to to slip into the second quarter of negative GDP prints? It's not our base case at this stage, but it's clear, I think, that the risk that we could see another negative GDP print for South Africa has grown, especially when you look at just how intense and how protracted the load shedding has been over these last few weeks.
Something else that's interesting is that even if it does have it does not have a direct impact on curtailing output, some respondents in this index have also flagged that load shedding also weighs on demand for their products due to lower activity elsewhere as well.
That's absolutely right. So I think one of the things that we of course need to remember is that some of the biggest clients of manufacturing firms are other manufacturing firms. I mean, just to give you an example, if you are in the business of making cans or whatever the case may be, I mean, your biggest clients will be food manufacturers, for instance. So when a lot of manufacturing firms are seeing weaker activity, it does tend to affect sort of overall demand, I think, in some other parts of the manufacturing sector. So I think it's a really important point to also bring out in these results here. But I should also just bring out as well here that it's not just the effects of load shedding on demand that manufacturers are telling us about. We're also starting to get the sense that this more challenging global backdrop, this weakening global economic activity, is starting to feed through to local manufacturers as well. In fact, they indicated in September that export sales actually contracted for the fourth consecutive month. So, sure, a big part, I think, of the weakness that we're seeing in September, I think, reflects load shedding for sure. But there's also a little bit of external weakness that is starting to feed through for local manufacturers.
Mielani, this particular index also tracks the employment within the manufacturing space, particularly the jobs that have been created and the prospects for more job creation. Looking at what we are hearing from this particular index, most respondents actually are saying that we should not expect a further expansion or jobs to be created in the near term until there is stability in the entire environment when it comes to the economy. And this is such an important one because manufacturing has such a huge output when it comes to GDP at 12%, which means it's one of the most important sectors in the South African economy.
And I think that even beyond the direct contribution that it has to GDP, the manufacturing sector also has very strong linkages with other parts of the economy. So I think that if we were to actually try and work out what is indirect contribution is in addition to the direct contribution that you speak about, we'll probably find it to be much higher. And I think on the issue of jobs that you raise here, you're right. I mean, the message is not exactly what we want to be seeing right now, given that we are still to recover all of the jobs that we lost through COVID. But at the same time, I think we should not be surprised to see that in this environment where manufacturers are saying to us they are struggling because of these power cuts, because of this more challenging global environment, they're saying that the jobs outlook is also reflected in the PMI data today, that in the near term, that unfortunately is continuing to look quite challenging for us.
The new sales orders as well have also plummeted from August to September. In addition to subdued domestic demand, the weakening external environment has also been reflected in the decline in the export index. We are not exporting what we are making, and there's less demand, there's less sales orders. There's a lot that has contributed to this. This does not bode well for Q3 GDP.
Look, that's right. I mean, as I was pointing out, a bit earlier, that sure, well, you look at the weakness of the new sales orders index, and manufacturers were saying, some of it is load shedding because some of their clients are affected by the power cuts. As I said, I think this weaker global growth outlook is starting to affect those outward-facing parts of the manufacturing sector, and you certainly see that in the performance of exports in particular. It's still a little bit too early, I would say, to say what Q3 GDP could look like. Obviously, the big question now is, could we see another contraction? And like I said, our base case is that we are going to see a small rebound in GDP in Q3, but given the amount of load shedding that we've seen in July and just more recently now in September, the risk that we do see another quarter of outright contraction in GDP is certainly quite elevated here.
That would make a second consecutive quarter of contraction, which would put us in a technical recession, a word that has been bandied about indeed. Lastly, when it comes to how those who are running these manufacturing shops and manufacturing companies responded, they are less optimistic about the business conditions going forward with this particular index tracking expected business conditions in 6 months' time, that has also fallen.
And again, I think it's one of those things that probably shouldn't surprise us because when you look at what's happening globally, we're seeing some of the highest inflation we've seen in decades, and what has come on the back of that is some of the major central banks starting to hike interest rates quite aggressively, quite quickly, and that is affecting global economic activity, which is having some adverse spillover effects into South Africa. So that's a challenge for local manufacturers. But again, given the current load shedding, the huge amount of uncertainty about where this is going, that I think is also feeding into these near-term expectations. And I think that is why we're seeing manufacturers saying, when we look at the next 6 months, we're not as optimistic as we were, compared with the previous survey.
Mielani Maluleke is a senior economist with ABSA, talking to us there about the massive impact, devastating impact that load shedding, among other things, and load shedding in particular, though, has had on the manufacturing sector, which is a massive sector when it comes to South Africa's economy. Thank you very much, Mielani, for your time.